The global financial system surrounds our lives like invisible architecture. Money moves across borders at the speed of light, yet few people understand how the mechanism truly works. At its core lies a structure built on trust, debt, and expectations of endless growth. But what if this structure is not as solid as we believe? What if the world economy functions less like a stable machine and more like a carefully balanced illusion, one that depends on new participants constantly entering the game? In this episode, we begin by exploring the foundations of modern capitalism to ask a simple but unsettling question. Is the system durable or merely disguised fragility? Every modern economy is powered by debt. Governments borrow, corporations borrow, individuals borrow, and the system expands as long as these obligations can be repaid someday. But repayment is rarely the point. The real engine is continuous borrowing. This creates a loop: more lending, more spending, more growth. Yet a question lingers beneath the numbers. Is this sustainable expansion, or a cycle that resembles a global-scale chain reaction? As debt towers over real productivity, some economists argue that the system requires perpetual motion to avoid collapse. Modern capitalism assumes something extraordinary, that markets can expand forever. But infinite growth on a finite planet is a mathematical contradiction. As resources thin and populations age, the system looks increasingly like a balloon that needs constant air. The moment expansion slows, pressure builds. This raises the unsettling possibility that our economy resembles a structure designed for permanent acceleration, one that may not know how to stop without falling apart. Behind every currency and every financial institution lies a silent agreement: trust. Money has value because we collectively believe it does. If that belief weakens, even the strongest economies can shatter. History shows that trust collapses faster than markets can recover. From bank runs to sudden hyperinflation, confidence is both the foundation and the Achilles heel of global finance. Without trust, the system evaporates like mist under sunlight. Speculation amplifies everything. Small trends become massive waves as investors chase profit at unprecedented speed. Entire markets can inflate purely from expectations, not real value. This behavior echoes classic financial bubbles, yet now it happens on a global scale with digital precision. The question arises: are we building wealth or feeding flames that could eventually consume the system itself? Digital currencies and instant transactions have created a new layer of complexity in the global economy. Money now moves with no physical limits, detached from gold, commodities, or any tangible resource. This transformation brings efficiency, but also fragility. When value exists only as data, a single disruption, technical, political, or cyber, could shake the entire structure. The rise of digital money raises a profound question. Have we entered an era where wealth exists only as code? And if so, how stable can such a system truly be? As the global economy expands, wealth becomes increasingly concentrated. A tiny fraction of individuals controls resources that surpass entire nations. This imbalance is more than a moral issue. It affects economic stability. When too much capital sits at the top, demand weakens, growth slows, and the system becomes dependent on artificial stimulation. Inequality acts like a shadow, always present, constantly growing, and capable of distorting the structure it inhabits. In a world built on participation, exclusion carries a high cost. Beneath the smooth surface of global trade, fractures are emerging. Supply chains stretch across continents, yet a single disruption can freeze entire industries. Political tensions, resource shortages, and climate disruptions expose vulnerabilities that were long ignored. These cracks don't indicate immediate collapse, but they show that the system is not the seamless machine it once appeared to be. The global economy has grown complex, perhaps too complex for its own stability. Much of today's economic activity occurs in virtual markets, derivatives, digital assets, speculative tokens. Trillions of dollars circulate without producing physical goods or essential services. Supporters call it innovation. Critics call it a mirage. If value becomes increasingly detached from real productivity, the economy risks drifting into a realm where numbers inflate, but society gains little. This raises a crucial dilemma. Are we building a stronger world, or just painting larger and more colorful financial illusions? The global economy stands at a crossroads. One path leads to increasing instability, where unsustainable debt, inequality, and speculation eventually pressure the system toward fragmentation. The other path points to reinvention. New financial models, digital transparency, and sustainable growth strategies. The truth is uncertain, but one thing is clear. A system built on constant expansion cannot remain unchanged forever. Whether the future brings collapse or transformation depends on the choices we make today.